it's really in this kind of moment of truth that your organization needs to be very clear about what is the intent of digital transformation. It is about improving customer experience. It is not to actually make it worse.
It's a way of really extending the use cases and the work that can be done with those legacy systems, but in a very flexible, easy to change and adapt way.
I think the speed of computing and the power of computing, that innovation that's happening, is just as important as AI. I think that's going to change the world. It's going to bring together the last 30 years of digital evolution, and that is the key.
Welcome to the Common Factor series. My name is Madeline Palmer and I'm the Head of Content Research at Editorial at Factor. The financial services sector is undergoing rapid transformation driven by automation, AI and digital innovation, as well as the ever-changing regulatory requirements. As banks and financial institutions strive to optimise operations, enhance compliance and deliver seamless customer experiences, the question remains, how can they adapt, evolve and stay ahead of the curve? Today we have an esteemed panel of industry leaders, technology experts and economic strategists who will share their perspectives on these critical topics. Thank you all for being here today. It's fantastic to have you all at this episode of the Common Factor series. Now guys, I'm going to jump straight into it. I wanted to throw a question out to the whole panel here today. You all bring a unique experience in banking, technology and security. I mean, I'd love if a couple of you could share a key trend in your field that you think is shaping the future of finance and banking. I might start with Warren, if you wanted to kick us off with what's a key trend that's jumping out to you at the moment, Warren?
Well, I think as in your introduction you mentioned it's optimisation, and from what I can see, the problem is, especially with financial institutions in this country, they're so complex and big, there's so much that wants to be achieved. But this is all about technology and the ever-changing economic realities we're facing. So it's change. I mean, we know the change is a perennial, but it is really running hard now, and in relation to the application of technology, because economic realities dictate that we have got to get on top of the fact that it's hard to find staff, that they're becoming expensive, what the expectations are of the customer, et cetera, et cetera. So change and the use of technology to deal with these challenges is, I think, the biggest issue.
Yeah, and I think something that comes to mind is that change is the only constant that we're dealing with at the moment that I've heard recently. Now, Tracie, I wanted to go to you. What is a key trend that you think is really shaping the future of banking?
Well, in the field of finance, certainly we have seen that AI and digital automation tools have already brought big shift to the field of finance. We are seeing that AI and automations is actually making process a lot faster and more accurate, as well as predictive analytics, actually delivering deeper and faster insights that weren't possible before.
100%. Stevie, you've joined us for a few of these discussions before, so thank you for coming on the Common Factor series again. Now, what's a key trend from your perspective as CIO at Beyond Bank? What's a key trend that you think is really making an impact?
I was going to say, is it too early to mention AI? But Tracie's
never too early.
So I'll go with trust. And it's not a new or recent thing. Like, banking is built on trust. And for us, the thing that is really top of mind when it comes to trust is cybersecurity, and I've spent a whole year really getting into the guts of cybersecurity. And you know, the ability for nascent technology, we're really facing into the threat of nascent technology potentially being able to, you know, break encryption methods that we've had for years, or, you know, help us solve for that problem too. So yeah, trust front of mind for us.
100%. And Guy, great to have you here. This is the first time you've joined us on the Common Factor series. Guy, key trends for you, what comes top of mind?
So a couple of people have mentioned change, and for me, the pace of change within financial services is increasing. You have the drivers for change, which are, you know, innovation, new technology, regulation, and organisations need to be able to adapt to that change much more effectively than previously they've been able to do. I think that's really because the pace of it is increasing. So that for me is one of the key trends, and seeing how technology can help support and create more agile financial services organisations, I think is something which is very interesting.
Yeah, I think a key word there is agility as well. So we'll delve into that in just a second. But Pankaj, you've heard the perspectives of the other panellists. I mean, what do you think a key trend is that's shaping the future of banking at this stage?
From my point of view, I think the banking industry has been trying to do the hyper-personalization for a long time, right? And with the advent of Gen AI, we have that opportunity. We can now do it at a cheaper price compared to what we have been doing earlier. And something like, the personal digital assistants, which were, which are becoming very, very real now. Personal or team-based digital assistants, that is now, is pretty common nowadays. And that, from my point of view, are the two main trends, hyper-personalization and digital assistant or digital twins.
Yeah, fantastic. Now, let's look at, Stevie mentioned the role of AI, and so did Tracie. Let's delve into AI, automation, digital transformation as well. Warren, I wanted to throw back to you. Given your experience in economic forecasting, how do you see AI and automation impacting the efficiency of financial institutions over the next sort of 5 years?
Oh, it's going to be revolutionary. I mean, I've been saying to people for a while, having spent a bit of time working for Australian banks, and not now, and it's a bit of a throwaway, but banks are going to have twice the revenue that they've got now in 15 years and half the staff. I think it's a good time to introduce to the group a key economic issue that I am is at the centre of my work, trying to analyse the economy and help business and financial managers look forward, and that is we have gone through one of the most significant changes in our lifetimes. COVID is just the marker point that supercharged this, and as the retirement of the baby boom generation. And we've got all these things that are going on, like lots of retired people and things, but at the core of it, we've shifted the balance of the economy, and we now have a world of structural labour shortage. We have this economy, the working age population is shrinking as a proportion of it, and so we have labour shortage. And we've come from a world where we've had the opposite. Every year we had more and more labour because more and more working age people coming into that economy. And technology is going to solve for this, because at the moment you can see the problems. I have lots of anecdotes, which I probably shouldn't say because I try to be funny and it's not, but we just don't have enough nurses and police, and that's just in the public sector. So there's this incentive that's going to sit in the economy. It's there now and it's going to get worse every year to work on how do you get the most out of every person you employ. And technology is here to save the day. In a modern service-based economy, whether it's the speed and power of computing or the AI elements, critical, and there'll be an incentive that means you'll get a return. And we're at the start of that journey. We are at the tip of the iceberg in application. I mean, the actual industry is still working out what AI is, and there's other challenges. We've got to have a heap of energy to supply these data centres and this computing power. So there's a whole range of things, but at the core of this conversation is that I can tell you as an economist, there are signals that are going to come out of this economy for business to work on how to be as efficient as possible. And in my view, financial services and the healthcare industry are at the front line, where some of the most obvious processes can be changed to save labour, to free people up, not to lose jobs and become unemployed, but to move into other areas where their skills and their time's more efficiently employed, such as in aged care or hospitality, whatever it is. And we've got a lot of challenges that are wrapped up in that, but technology is at the core of it, or AI definitely. And supercomputing.
And the key word there that you mentioned is efficiency as well, and being able to, I guess, do more with less and less people as well and less staff. Now, Stevie, how are you leveraging AI and automation to drive that operational efficiency while also maintaining that customer-first approach at Beyond Bank? Talk me through that.
Yeah, so we are primarily a customer human-to-human bank. Like we absolutely leverage technology to ensure that the people that are having conversations with customers, like our branch managers and our frontline bankers and mobiles, have the best information or the most recent information or the most whole picture of their customers' current situation, and they bring together that using technology and their experience in how to manage money so that they can have really great conversations. The thing that these tools have done for us is to speed up that kind of research stage so that they can spend actually more time with their customers. And like even with our call centre, like, I mean, many people will know, like trying to listen, really listen to a conversation while trying to take notes, while thinking, oh, this compliance and that policy, it's hard. And so, you know, we're really looking at how do we leverage these kind of nascent technologies, AI, Gen AI, to be able to like pass the massive amount of information we have in our knowledge bases to bring forward the relevant information naturally so that the people that are interacting with customers are actually having that conversation and that, you know, magically they've got the insights that appear. So it's very much about augmentation. It's not about replacement. For us, yeah.
Yeah, and I think I've had a previous conversation with Guy around how some of this technology is really optimising KYC processes as well. And Guy, I mean, low-code automation is transforming financial services. What are some of those key elements that are shaping the industry's future when it comes to low-code?
So when it comes to low-code automation platforms like Appian's, it's allowing organizations to deliver that agility. Financial services organizations tend to be hugely complex. They have lots of systems, they have lots of data, and traditionally what's happened is that people have bridged the gaps between all of these disparate technologies, and you have lots of people gathering data and aggregating it and looking at it and doing processes off the back of that. And it tends to be very inefficient and ineffective. So by automating those processes, taking away the manual parts, surfacing data from that complex infrastructure, presenting it to the SMEs in a very easily consumable format and allowing them to do work, using technology like AI to give greater insight into the amount of data that's available to these individuals, summarizing it, pointing to where there might be additional information or insight for them to act on. That's really what technology is able to do. And I think that is something that is really helping these organizations manage the changes that are driving the business at the moment.
Yeah, definitely. I mean, I saw Pankaj nodding away just there. I would love, Pankaj, just to find out where you've seen the role of the digital workplace and digital workplace technology really evolving over the years, and where do you see it heading next? And does any of kind of what Guy's mentioned to you resonate?
I think it does, and digital workplace technologies have changed dramatically thanks to COVID, right? So if you look at 4 years back, 5 years back, just before COVID, working from home was a luxury, right? There would be a handful of people, mostly execs, few tech folks, who will have the ability to work from home. Now, if you look at it, you just work from home, you open your laptop, and it just automatically connects, right? You used to have 4 or 5 different applications which you would use to communicate with people. You have to pick up your phone, you have to go into a meeting room to get into a bridge. Video conferencing used to be extremely complex and so on. Some of these technologies have become so commoditized, and that has really helped in addressing some of the challenges which we have had, especially on the labor side, as we said earlier. It is making the world a more connected place.
Now, I want to go back to the word efficiency and the concept of efficiency as well. Tracie, digital transformation obviously focuses on achieving some sort of efficiency. How can banks maintain that human touch while scaling AI-driven initiatives as well?
That is actually such an important areas to focus because organizations often, really focus on driving efficiency, and sometimes they might stumble actually by prioritizing cost saving, for example, over customer experience. I have a personal story to tell on this one to illustrate. So recently I actually went overseas and I need to notify my credit card companies about my travel plans. So that company actually used to have a call center that opened from 8 to 10, Monday to Sunday. Now, in a bid to save costs, they reduced the hours from 9 to 5, Monday to Friday. And what's actually even worse is that they hid that contact center details deep into the website, make it almost impossible to find and just discourage customers to call them. So I have no choice to actually reach out to the bot. and the bot couldn't understand my query and keep on actually pointing me to irrelevant information about foreign currency conversion. And that was just so frustrating. And I want them to actually tell me that how to actually contact a human. They wouldn't. And the worst thing, actually, the even worse thing is that it couldn't actually acknowledge my frustration. And it continued to speak to me in a tone that as if he's already resolved my query and to say, oh, have I actually resolved your query? Are you happy with my service? I'm like, no. So after 30 frustrating moments, I finally find a number from a friend. And then to find out that they closed, it's because it's a Friday night. So I feel that, it's really in this kind of moment of truth that organizations need to be very clear about what is the intent of digital transformation. It is about improving customer experience. It is not to actually make it worse. So, having that right balance, it is so important. And I think that whilst, this AI bots and there is this, virtual assistants, right? So we just need to make sure that until the AI technologies is mature, we must actually ensure that there's access that's actually readily available for customers, so then they can actually have a consistent service experience from the organization, and that they don't feel abandoned and they don't feel unsupported, because that's just not the way to drive, to build customer loyalty, right?
And you can lose customers that way. But I think it's an important thing to understand about innovation, and it's always been the case. Having spent a lot of time in big banks and big organisations, a lot of the staff think innovation is a light bulb moment and bang, you've got it. History shows that innovation is try, fail, try, fail, try, fail. You get an example of trying, failing, and the risk for a business that comes with that, but businesses have to take that risk. But what they have to do is mitigate it and manage to it. And that is, as soon as that happens, what you just described with a bad experience, they have to be on top of it and fix it. But you have to just keep trying, because the application of these technologies to all different levels of all these businesses, and not just in banking and finance, is not just going to be a magic solution. It is actually a provider working with the people in the business, or even that one component of a business, to solve for their individual problems and the customer problem, and in the context of what their business model is. So it's try, fail, try, fail. So you're managing a process of experimentation which is live with your customers, and you've got to work to make sure you don't lose your customers in the process.
100%. And we've had conversations around whether you try, fail within internally and then pilot it internally and then try it out externally as well. And there is that balance there. But Warren, I wanted to go back to you and talk around our favourite word, which is compliance and security. That's really fun. Now, how... No, but look, Warren, I mean, how can AI-driven economic forecasting enhance risk management for banks at this stage?
Yeah, so let's just be clear what economic forecasting is. There's two elements. There is data, and then there is the application of data that describes the state of our world into models and analytics that gives you an insight that you can make a decision on the basis of. And economics is a great example for everyone in that we have the capacity now to get so much more data, and I think people have referenced this, and to manage it. I mean, we used to value the skills, the person who was able to get data, order it, manage it, put it into models, run the models. That was so valued. AI is going to take away that. I mean, good, because it was expensive to get those people. But then they've got to learn a new skill set. But then there's this element of the models. So I'm going to very quickly tell you about weather forecasting. 25 years ago, the insights and data they got from weather, from sea temperature to wind speed, all around Europe, America, everyone pumping in, and then computing technology took a step up that they could get that data in, run their models, and there was a massive improvement in weather forecasting, admittedly only for the next 3 or 4 days, but it had a real and massive impact for tradies, for everyone, farmers. The models of the weather system were basically finalised in the 1920s. And there's 6 differential equations. It hasn't changed. Yep. So in economics, there's not 6 differential equations. In fact, we don't even know how many equations there are. The problem with economics is there's all this complexity, and the AI and everything can help with the data, but we're still going to have economists arguing with each other about the models, and that's another issue. But in terms of application, it's huge because we can be open-minded about all these new data sources we can get to help in all elements of banking, whether it's the credit risk management, whether it's informing staff, all this sort of stuff. But we've got to still have that human judgment because there isn't a set rule. And that's really important. So the first wave is about getting all the information you can, ordering it, and bringing it down to a usable state for a decision maker in the firm. So as a senior person in a bank, and these big banks in Australia, they need all the help they can get to have it spelled out for them. And of course, it's consistency too. Like, you want to be getting similar data sets, et cetera, et cetera. So it's going to be massive, but again, it doesn't disconnect us from the human judgment. And we won't even start about what it means for economic forecasting and the broader community, because that's very tricky.
Yes, 100%. And I think there's an element in there around the real-time data access as well, and being able to, the speed that we can access this data.
I think the speed of computing and the power of computing, that innovation that's happening, is just as important as AI. Yeah. I think that's going to change the world. It's going to bring together the last 30 years of digital evolution, and that is the key. And of course, there's lots of other elements to it, as I mentioned, like the energy required, et cetera, et cetera.
100%. I want to delve into regulatory requirements as well. I mean, given your experience, Tracie, within the regulatory realm, delivering these requirements under such critical deadlines, how can banks strike a balance between compliance but also agility as well, that word agility that we've spoken about?
It's such an important questions and topics to consider, because I think many of us actually have experience in the a time in our career that we have to actually make a difficult choice, almost difficult choice to say, well, do I actually go with, do I focus on meeting compliance, or do I actually focus on agility? Now, whilst that's true, in my experience, I've seen actually times that it doesn't have to be the case. We don't actually always have to choose, and it is a choice. So, because this is what I believe, compliance is not meant to be a roadblock, and regulations are there to provide clear guardrails, minimum standards. Actually, they're there to protect customers, as well as to protect the business. So if you actually approach compliance, not just in form, but also in spirit, that's actually when we're actually building a robust and sustainable foundations that sets the business up for long-term success, right? So what that means is that we would have to start embedding compliance in everyday processes, and tools like RegTech, so they could actually help banks to streamline their operations, reduce conflicts, and actually create capacity for innovations. So it's probably doesn't have to be a sacrifice, of one for the other. It's perhaps a case of finding a way to align them so that they can work more seamlessly together. So I think, to sum up, this is actually what I think, that if an organization that truly embrace risk management and compliance, if they do, they don't actually just meet regulatory requirements. They actually could turn what might seem like a burden into a genuine competitive advantage, and really that empower them to thrive long into the future.
Yeah, I love that. It is that kind of mindset change for the whole organisation as well when it comes to looking at regulations. Guy, I wanted to throw back to you from Appian's perspective, if you could maybe share some insights on how AI-driven compliance solutions are currently helping banks adapt to this ever-changing environment.
Yeah, certainly. So when you talk about compliance, there are huge amounts of data within financial services organisations. You have the regulations that impact the business, and if you're talking about global businesses, then there are many different versions of that regulation in each of the countries in which they operate. Then you have your policies and procedures laid out, and then you have your risk controls in your risk controls library. And they're all interrelated, but they tend to be in different data sets and different formats. And so there's a lot of complexity in making the links between a regulation, policies and procedures, and the risk controls that have been identified to manage the risk within those functions. So AI can certainly play a part in that, generative AI, in making the linkages between those disparate data sets and starting to make the connections between regulation, new regulation and regulatory change, what the impact that will have on policies and procedures, and therefore what risk controls need to be updated. And being able to manage that cycle of regulatory change effectively across the organisation, I think is hugely advantageous to financial services organisations, given that it is such a heavily regulated industry. And then what you have then is the opportunity for your employees to understand what those changes are. They have the ability to be able to ask questions and interrogate all of those compliance requirements so that they can understand how those compliance changes will impact their day-to-day work. If you have that, all of those elements in your organisation, then you can deliver compliance change in a much more effective and organised way. You can reduce the risk, you can reduce the risk of failure of compliance, but also you can also support your employees as you take them through those changes as well. So technology in this respect, and certainly generative AI, can play a major part in being able to remove some of the barriers and some of the friction around delivering change in your organisation.
Yeah. You mentioned education as well. I think it's about educating our staff too on some of these changes, bringing them along for the journey. I wanted.
Well, it's very disruptive to them, and you know, people don't like change in any respect. And if the process of introducing technology into a business function or a business in general is not explained well, not well understood, it's just barriers up, and that's why you need, actually, at this stage of the game, you need professionals to come in and work with senior management to talk about the way you're going to communicate this, and then to walk people through it.
Yeah.
You know, I think we're getting evidence out of the US, which is probably as far as anyone's advanced on this, that off-the-shelf, you know, technology solutions, when they're in complex processes, aren't going to work. You need service providers to come and step you through it and demonstrate to people that it's going to improve their life. And some people, their job will go, and that's got to be managed as well. I mean, the pace of change is going to speed up. So yeah, the human element, I mean, this is all technology and we think about all this stuff, but it's so human. Yep. And if we refuse to accept the human elements of it, we're not going to execute it well, we're going to stuff it up. And that's really what the senior leaders of these organisations have got to be doing right now, is working out the implementation and management of these processes.
It comes down to that change management piece as well. And
well, the computer's not going to run the bank.
Exactly.
We hope.
Let's hope not. Let's hope not. Otherwise, we wouldn't be sitting here, would we? I mean, Stevie, what challenges do mid-sized banks face in this kind of adopting of emerging technologies, especially from a beyond bank perspective? You've come from a larger organisation, but talk me through what mid-sized banks are kind of facing at this stage, and what's the difference?
Yeah, I think there's challenges, and I mean, sometimes it's a little bit easier. Like if you go to a smaller bank, like the proximity to the decision-making layer is small. We don't have layers and layers of people. We don't have, we are regulated in the exact same way as the big banks, but we probably don't have as much bureaucracy. So that makes the speed of decisions faster. It means that we can have a very robust conversation very frequently with, you know, everyone from the specialist to the board about decisions we want to make in all of this, very openly and very frequently, which is great. You just don't have that luxury in the banks, but what you do is have a lot more money, and you know, we are very, very efficient with the way that we spend our money, especially being customer owned. Like every dollar is actually our customers' money, and we really do spend it that way. And so, you know, it's always, you know, we're very keen to find efficiencies, because the less money we spend, you have to spend money to get the efficiencies, to use the technology. But like every dollar we save, we put back into the business so that we can, you know, provide more to our customers, or to do more things with our teams and our people. So yeah, it's a bit of balance, you know. Yeah. We are cautiously optimistic, and you know, we are experimenting, but it's been really great because in a small org, you're so hands-on. So I've had, like literally when we were writing our AI governance policy, it was like me and one of my team who runs tech risk and governance and the data governance guy, and we had papers and all reference papers, and we're like literally writing that AI policy ourselves. So like you get to learn so much about that, and I think that's the wonderful difference, that real depth of knowledge that you gain.
Yeah,
and if it is going to be transformative to the industry, the scale's important, but the agility and in my case working with Judo, which has all the same issues of size, is the lack of legacy.
Yeah.
So there's headwinds and tailwinds, and there's going to be this great sort of experiment across the Australian banking system as this happens over the next decade.
You mentioned the scary word legacy. I'm going to delve into that in just a moment, but I wanted to turn to Pankaj, who's you've worked across many regions as well, and we're talking a little bit about implementing large-scale technology programs, but how do you navigate cultural differences when you're trying to implement these initiatives?
I think one of the easiest way to for the success of these large transformation programs is to represent in your program teams or your transformation teams, have the local representation, right? Build diverse teams, right? And I have been fortunate in my life to work across many different sectors, have traveled to few places, right? And work with those customers directly. It can be a huge advantage, right? Especially even in aged bank, having presence in 29 plus countries and having their teams which are spread across the globe. It's a huge advantage. I can finish my day at 5 p.m. most of the days, right? While, some of my other colleagues or some of my other team members, for them it's midday, they can just pick it up, right? If there's an incident, I don't need to be on the call midnight. I know my other colleague will pick it up, right? So that's a huge advantage. So, and at the same time, we need to be sensitive to local cultures, right? We all do things our own ways, right? We all are different people. So it is being sensitive and being fair to each one of them. It reminds me of a time when in my previous organization, I was working for a large federal customer in Asia, and we had team members from 4 different continents, right? It was a nightmare to find a common time which will be suitable to everyone, right? Now, but at the same time, you want to be fair to everyone, right? You want to be respectful. So what we did was, we'll all take a time every week when we have our stand-ups, which is not comfortable to us personally, right? So that built a lot of confidence, right? And we have said this earlier, I think even for large transformation program or any other program, I use the acronym of PPT, right? We all love PPTs, right? 50-page slides and all that. Yeah. PPT for me is people, process, technology, right? For the success of these large programs or any programs, you need to look at all 3 angles. Technology itself alone cannot take you to the success.
Yeah, 100%. Again, it brings it back to that human element. I think that's the common thread we're seeing in the conversation at the moment. But Tracie, looking at finance leaders and the importance of leadership in this space, how can they ensure that AI-driven decision making remains transparent but aligned with the business objectives as well? How do you kind of approach that?
This is actually certainly a topic that would become increasingly pressing. So there's a 3-pronged approach that we could actually adopt to help effectively manage it. So one, start with a clear governance framework. So it's a bit like a roadmap on how AI models could make decisions, and it ensures that those decisions align with the organization's goals and prevent the AI becoming a black box. So that could actually undermine trust, fairness, and business objectives. Then, just like for any other systems, AI will need regular health checks. So that means conducting audits, reviews, making sure that it's actually doing what it's meant to be doing. And there's tools like explainable AI dashboards that could actually help the reviews more effective, but also involving cross-functional teams to come in to help with the review to make sure the process is robust and is fair. Last but not least is, I think, strong leadership oversight is going to make a huge difference. So leaders could actually come in and ask those very tough questions such as, are we actually using high quality, reliable data for the models? Are the inputs appropriate, and are the decisions actually equitable? So this kind of active scrutiny from leaders, they're actually going to make a huge difference in actually keeping the AIs on track. And not only that, they help build trust with both the internal teams as well as the external stakeholders. So the reason why I say that this is actually going to be increasingly more pressing is because we're actually seeing more and more this sort of AI-driven decision making is coming out in the real world. And so we need to have a way to manage it. So for example, auto-decisioning for the commonly used for loans and credit cards approvals. So whilst it helped to streamline processes and deliver efficiencies, but we need to actually make sure that we are being equitable across different customer segments. And similarly for another example, auto-decisioning, dynamic pricing. Dynamic pricing, so it has the potential and the ability to help maximize returns. But at the same time, we need to make sure that we are protecting vulnerable customers and that we are maintaining fairness. So, but to sum up though, if we actually adopt this three-pronged approach around having a clear governance framework, regular reviews, and have a strong leadership oversight, that could actually help us to ensure that AI decision making remains transparent and aligned with business objectives in the long run.
Yeah, for sure. And I like the point you make around governance as well, because we do know that unfortunately AI models can be built with bias as well. So it's really important to mention that governance piece. But Guy, I want to turn to you and bring it back to that legacy piece that we were talking about that Warren mentioned. I mean, we know that financial institutions, particularly larger financial institutions, often struggle with the legacy systems. But how can AI and automation help modernise without disrupting the core banking operations?
So it is a problem, and lots of large organisations have that complexity. And those legacy platforms tend to be what I describe as brittle. They're very good at doing the work that they do, but you don't want to change or adapt them to try and meet, the reality of the changing organisation. So we propose a way, it's called an agility layer, that sits on top of this legacy architecture. It integrates with those legacy systems. It surfaces the data without the need to migrate that data, which is really key if you're doing this at scale, and brings that data into a single pane of glass, mixes it with data from other systems, and then allows you to drive processes through to completion, and then as appropriate, update those golden source records as well. So this approach allows the users then to use and consume all of the data and processes that exist within those legacy systems, but in a very easy to consume, friendly, digital way, extending the use cases and the processes that can use that data and sort of insulating them from that complexity. So it's a way of really extending the use cases and the work that can be done with those legacy systems, but in a very flexible, easy to change and adapt way. And organisations that do that, I think, start to develop that real agility capability.
Yeah, fantastic. And I mean, Warren, just going back to you, do you think automation could lead to job displacement, though? You briefly touched on that in the banking sector. I mean, it's pretty obvious, I think, what you're going to say, but will it also create new opportunities as well?
Well, this is why that demographic story is so important. If this sort of technology wave was coming through 50 years ago, where we had excess labour and unemployment was the problem, it would be a genuine source of fear and concern, but it's the opposite. And it's not just about allaying fears that people are not going to be able to get work and employment. It's actually, we need it. The economy works through incentives, through price signals to make things happen. And you watch in this country, somehow we've avoided an increase in the cost of labour, or according to the official statistics, which I don't believe. But anyway, it's only going one way. And that will mean business will have a real need to find alternatives. And of course, if you've got a quantity constraint, i.e. you just can't find staff, that's another reason. So this is all happening. And unfortunately for Australia, what this means is it's all about getting our people into the right roles. So the estimates from industry experts and other intellectuals tells us that AI will touch between 25 and 50% of roles. I think that's at least. Will every one of those mean a job loss? Of course they won't. But let's just say it's 15% of the workforce are going to lose their jobs in the next 10 years because AI is going to do it. Well, then there's heaps of jobs now. It's just about, we've got to get better at getting people into the right jobs and the idea of moving jobs. But at the moment, Australia has the lowest labour force mobility of any country that I can see in the advanced world, the high income world. And we actually have a culture that makes it very hard. So, and of course we've got a government at the moment which is actually reinforcing that every day with things like unions and various other things. So we've got a big problem, and this 40 years that we've done so well for a whole range of reasons, most importantly our economy has worked well. Well, in this new demographic world with this technology and everything, we're not shaping up as dealing with it well. We've got to focus on this, and if we wait till it's obvious, we'll be well behind the pack. And it'll be a crisis, so a macroeconomic crisis. So it's a big deal. So yeah, a lot of people's roles are going to change. A lot of people are going to have to leave industries, but we've got to learn how to cushion the financial blow, the emotional blow, to make it actually a good thing. Sort of like I was using the example how American entrepreneurs, they fail, it's actually good on you, mate, let's go. In the UK and Australia, you fail, you're out for life. I mean, we're losing that, I think. I think
it's really incumbent, though, in people, leaders, to really focus on development plans 2 steps ahead. I mean, we've looked at, you know, the example you talked about like the data modelers or the people that are literally pulling reports in old kind of SQL databases. Like, we looked at in a data transformation, what are we going to do with people that, like, that will now be automated? Like, what roles will we move them in? And we've started that development plan already, getting them certified, getting them upskilled. I think that's going to be the marking of really true people leaders.
That's really important, and especially for the massive firms that have got just a natural turnover. But actually, it's beyond the firm level.
Oh yeah.
And it's at a legal, industrial relations, cultural. We've actually got to go through a mindset shift in our whole society about what it means to change, not just jobs, but careers and industries. And look, pay is going to shift. Like, there's going to be roles that you're going to get paid well for. In fact, there'll be more harmonisation because everyone's pay is going to go up. That's more of a 10, 20-year view. But we've got to accept what this future is and work towards it rather than resist it. I see it as inevitable. I can paint a picture of it in my head, but I think about it literally every day. The issue is getting it to our leaders in our workforce, in our business, and then, of course, in our political leaders. And not waiting for things to start really breaking. They are actually already starting to break at a minor level. So yeah, it's a big deal, but it's beyond just the firm level. But within the firm level, it's really important to do that as well, where you can. But you know, you might need 20% less staff in for the same level of business in 5 years or 10 years. So you're just not going to be able to accommodate everyone.
Madeline, if I can add to it, I think, see, it's human to have that fear of unknown, right? The kind of change we have had, we keep on going back to change, right, in the last 2 years is tremendous. It's like anything we have ever seen, right? Now, it reminds me of the quote of one of our economists, right, from ANZ Bank, and he said, don't be afraid of the AI. Be afraid of the person who knows AI better than you, right? So it's on us as leaders, as our government, political leaders, everybody, is to inculcate that culture of a learning mindset, right? Keep learning, right? Keep growing. And I think it's also an opportunity for Australia and many of the other industries is the cost of experimentation or of innovation have significantly come down with these commoditized technologies, right? And it's an opportunity for Australia to now compete at a bigger stage.
I think that at the end of the day, we are trailing behind our global counterparts. So it's really important that we do step up. So I want to say a big thank you to all of you for joining us for our conversation today. It's been fantastic to kind of delve into some of these issues that our banking institutions are facing and financial services are facing at this stage, and plenty more conversations, I think, to be had, a lot of food for thought. But again, thank you for joining us on the Common Factor series.
Thank you.
Thank you.